Hello guys, welcome to another backtesting video. Today I'm backtesting the data of Thursday, 9th November 2023, as I have also backtested Tuesday's data. On Tuesday I was looking for buys to fill up this fair value gap. Which fair value gap, you may be asking? This fair value gap right here on the daily time frame. So after filling up this fair value gap, the price is now rejecting from that fair value gap, you can see, and giving a bearish pin bar. Until and unless the market gives us confirmation, we don't consider it. But now at this point, the market has given us confirmation that it's now rejecting to head towards the downside, to continue with the weekly bias being bearish. As my weekly bias is also bearish on DXY, which will be opposite on GBP USD. On GBP USD, Wednesday the price gave a bullish pin bar, and also it filled up the fair value gap. As you can see, it filled up the fair value gap 90%. After filling up this fair value gap 90%, the price is now rejecting, and we know, and it's also aligning with the weekly bias being bullish. So at this point I go to the 4-hour time frame, and also it is now completed. The price is saying that now it is completed making the higher low on the daily, and it might continue making its higher high leg, right? On the 4-hourly, this was the high that caused this low, this was the higher high, change of character to the downside, lower highs, lower lows. But on 4-hourly, we didn't got the change of character to the upside yet, but the overall higher time frame bias is bullish. So that is why we can take this trade, you understand? Because the weekly bias is bullish, we can take this trade. If the weekly bias was bearish, we couldn't have taken this trade, because the 4-hour has not given change of character to the upside. But as we can see on the hourly, the market was bearish, making lows, highs, lows, highs, lower highs, lower lows, lower highs, lower lows. This was the last low that caused this high. So now this is the higher high, which was caused by this higher low right here, and this was the change of character. This was the demand zone, H1 demand zone change of character. This was the order block that I was looking to trade. So the bias was clearly bullish on Thursday, and also on Thursday there was no such huge news. There was unemployment claims at 7 p.m, so I can trade London session, as we know, and it was also aligning with our bias. Everything was making sense. And also if there are fair value gaps on the daily time frame, we can also change our bias, or adapt is a good word, adapt our bias according to the daily time frame. You can clearly see here the market literally consolidated exactly how I wanted to. The price literally made the higher low. When the market opened, it made the higher low. Now I need something like this, a quick demand zone mitigation, to then continue to the upside. That will be a class setup. And also the previous day high is not taken yet, so the targets are also very, very clear going on Thursday. So my bias is so clear. The previous day high is not yet taken, so the targets are also so clear. Whereas there is equal highs here, and we also know equal highs in the markets are targeted because of high liquidity there. And the Asian low got swept. There was SMT with EU inducement, everything I will show you, don't worry. So this demand zone was on hourly. There was a demand zone here, as you can see, but this demand zone was already in the Asian range, so we don't consider that. We can consider that, but no, personally I don't consider that. So now let me quickly show you the DXY correlation on DXY. Whereas on DXY, the market was literally, I was looking to trade from this sort of supply zone on the M15. This was the hourly supply I was looking for, but you know, according to Asian range we adapt, right? So this was the adapted, refined supply zone that I was looking to trade. On DXY, literally the Asian high got swept. There was previous structural liquidity here, which will get swept afterwards, but until now it is not swept yet. Whereas the Asian high got swept, right? So it's aligning with the strategy, right? But GBP USD, GU didn't sweep the Asian low, so that's called SMT right there. GU didn't sweep the Asian low, and DXY has swept the Asian high. So with our bias being bullish, what does that indicate is the market doesn't need to go and sweep the low to make the high. That's what I was thinking, because if I was thinking with the bias, that would be my anticipation of what happened there. But as we can see here, literally if I would have entered here, this was not our time, bro. I would never enter at this point, because this is 11:45. This is not our time. Even if I missed the trade, doesn't matter. So I didn't took the trade here. Having rules are so important. I don't trade this time. I only start looking for a trade from 12:30, which was here. There was no way I was trading this, and if I was waiting for, I would have waited for this position to get induced. After this inducement, I took the trade somewhere around here with a 10 pip stop loss, targeting this equal highs as my target. The targets were so clean, and targeting the previous day high. If we are bullish, if our bias is bullish here, we will target the previous day high if it's not taking early on, and exactly we did that. Whereas on DXY also this position got induced, and pretty much we got the move. The Asian high got swept again, the Asian high got swept, and then pretty much the move happened to the downside. But also sometimes GU will make the move and DXY will not make the move, right? They don't 100% align with each other, whereas EU aligns with DXY. As you can see, they are so similar right there, but GU makes it move. So we want to trade GU and catch those beautiful moves on GU. Whatever happens on EU and DXY doesn't matter. Sometimes we will trade EU also, but according to my analysis until now, trading GU is more profitable for me. And this was the trade, this was the inducement. I have also journaled this trade so I can look back at it. It was a very, very good trade. It was an A-class setup. Let me write it. It was an A-class setup because of the targets were clear, the bias was clear, weekly, daily, right? So yeah. And also let me show you one more thing. The price went down again, right? If you miss the London move, for example, if you miss this move, you could have taken the trade again on the New York session. How? This hourly order block was mitigated again. On New York session, my bias is still bullish, right? After this doji rejection, after seeing that rejection candlestick and this 1 hourly bullish candle, I could have entered after this 30 minutes. The 30 minutes is also very important. Sometimes the 30 minutes is more cleaner than the H1 and 15, so you have to look at the 30 also. After this bullish pin bar on 30, we could have entered somewhere around here for a 1:3 again. And if you miss the London move, you could have taken this. You can see the London and New York kill zone timings. The move happens if the bias is clear. So yeah, A-class setup.